Yes, students, now we will revise chapter 2, which covers two topics, that is scope of total income as per section 5 and the residential status as per section 6. So in this chapter, we will be learning section 5 along with section 7 and 9, which is connected to section 5, and also we will be learning the residential status as given in section 6. But first, we will focus on residential status and then we will learn scope of total income, guys. Yes, sir. So residential status, sir, why residential status is important? The incidence of tax of a particular person depends on his residential status. Whether he is liable to pay tax on a particular income or not depends on the residential status of a person. And residential status has to be decided separately for each and every category of person. Who is person? We have already learned in the previous chapter. That is, it is defined in section 2 clause 31, guys. And the residential status of each category of person, how do we decide it, is given in section 6. And it has totally 7 subsections. I have given the list of sections here along with the title. You can just have a look into it. We'll be covering each and every section in detail. I have made one single chart which covers the entire topic of residential status, guys. So we'll learn it one by one. First, let us focus on the residential status of individual, guys. There are two basic conditions which are given in section 6 subsection 1. If an individual satisfy any one of this condition, then he or she will become resident in India. And once they become resident, we should also check whether they are ordinary resident or not ordinary resident, for which we need to refer to section 6.6, where there are two additional conditions given. So what are those? We will see one by one. So as I told, there are two basic conditions given in section 6 subsection 1, guys. What are those? First, an individual should be in India for a total period of 182 days or more during previous year. Sir, previous year means what is the previous year applicable for your exam? It is 2025 26, guys. So we need to count how many days he or she was in India during the previous year. Yes, and while counting, the date of arrival as well as the date of departure is considered to be in India irrespective of the time. Irrespective of the time. Also, guys, while counting the number of days like 182 days, 60 days, 365 days and all, we need not count it continuously. Even if an individual is coming to India, then going back again, coming again. So in that case, we need to count the total number of days of stay in India during the previous year. It need not be continuous. Okay, let me repeat this, guys, again. An individual should be in India for a total period of 182 days or more. If first condition is not satisfied, then we will go and check the second condition. The second condition has 2 points. Both the conditions has to be satisfied. Please be careful. What is it? 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. And while counting this 4 years, we should not include our previous year. 60 days is for our previous year, whereas 365 days or more is during 4 years preceding our previous year. Okay, sir. And please be careful. Both of this condition has to be satisfied. Means the second condition has two cumulative points. Both of them has to be satisfied, guys. For example, sir, an individual was in India for 60 days or more during previous year. But in last 4 years, they were not in India for 365 days. Is second condition satisfied? No, guys. Second condition is not satisfied. Is that clear? Yes. So, if an individual satisfy any one of the condition given under section 6 subsection 1, which we call it as basic condition, then he or she would become resident in India. Once an individual is resident, we need to go and check. I have given here. If satisfied, then we need to go and check the additional conditions. Where is additional conditions given, sir? Under section 6 subsection 6. Let me zoom it a little bit. There are two additional conditions given under section 6.6, guys. If both the conditions are satisfied, then an individual will become ordinary resident. If any one of them is not satisfied or if both of them are not satisfied, then we call them as not ordinary resident or else resident but not ordinary resident, guys. Is that clear? Yes, some. So what are those two additional conditions? We will see it. An individual has to be resident in India for at least 2 years out of the last 10 years preceding the previous year. And he or she should be in India for 730 days or more during 7 years preceding the previous year. Is that clear? And please be careful while counting this 10 years as well as 7 years. Sir, should we count our previous year? No. We are deciding the residential status for our previous year 25-26. But while checking this 10 years and 7 years, it should be preceding the previous year. So exclude the previous year and go back to last 10 years and last 7 years and check these conditions, guys. Is that clear? Sir, why is it so? Because the number of days of stay in the previous year, we would have already considered in section 6, subsection 1 itself, guys. Again and again, we need not check the number of days or residential status for the same year. And of course, now in the past, that is last 10 years, when an individual will be a resident in India, that is, they have told at least for 2 years out of last 10 years, they should be resident in India, right? Yes, sir. When they will be resident, if they have satisfied any one of this condition, correct? That is in the past. If an individual has satisfied any one of this condition, then they would have become resident in that respective year. In that scenario, can we consider that they were resident in that past year? Yes, guys. Even if they were deemed resident as per section 6(1)(a) in the past, even if they were deemed resident in the past, last 10 years, still, do we consider them as resident, guys? Yes. Because here they just told the word resident. They didn't talk about ordinary, not ordinary, and all. So any resident, including deemed resident, would be counted here. Is that clear? Yes, sir. Fine. So we learned that if any one of the basic condition is satisfied under section 6(1), then they would become resident. But there are two special cases which are given in the explanation, guys. This is the content given in the explanation. So these are the two special cases where the only first condition is applicable. That means in the following two cases, the second condition won't be applicable. So if you are an individual who is covered in any one of this special case, then you can become a resident in India only if you satisfy the first condition given under section 6(1), which is 182 days or more during the previous year. Is that clear? Yes. So what is it? We will see. Only the first condition should be satisfied, that is 182 days or more in the following cases. First one, Indian citizen who leaves India as a member of Indian ship, that is crew member, or for the purposes of employment outside India. So an individual who is an Indian citizen who is leaving India as a member of Indian ship or for the purpose of employment outside India, when are they leaving it? During the previous year. In that case, irrespective of their income, how much is their Indian income and all, do we check it? No, guys. Here the Indian income is irrelevant. Please be careful. Whether it is less than 15 lakh or more than 15 lakh, for them only first condition is applicable. That's all. Is that clear? Yes. So the first point was going outside India, whereas second point is reverse. Indian citizen or a person of Indian origin. One extra person is covered here. Person of Indian origin was not there in the first point. Please be careful, guys. Now, who is the person of Indian origin? If assessee or any of his parents or grandparents are born in undivided India, we call them as person of Indian origin because their origin is in India. Undivided India means, guys, before independence, whatever is a part of India, Pakistan, and Bangladesh is called undivided India. Is that clear? For example, my grandfather, assume, was born in Dhaka or Lahore. Am I considered as a person of Indian origin? Yes, guys. Clear? And sir, when they were born in Lahore or Dhaka, assume in 1945, before independence. Clear? Yes, guys. Chalo, let me read the second point. Indian citizen or a person of Indian origin engaged in business, employment, profession outside India comes on a visit. Okay, they are already settled outside India. Now they are coming to India for a visit. When? During the previous year. And now the key point is total income other than the income from foreign source. In simple, income from Indian source. Clear? Total income other than the income from foreign source means, can I call it as Indian income or income from Indian source? Yes. Is up to 15 lakh. In that case also, second condition is not applicable, guys. So if you are a person who is covered in this point, then you would become resident in India only if you are in India during the previous year for 182 days or more. Okay. Then, sir, what in this case, if the total income other than the income from foreign source is more than 15 lakh, then it is carried here, guys. Please be careful here. It is coming here. Please be careful. Now, here it is up to 15 lakh, whereas here, if it is more than 15 lakh, let me read it. If the total income other than the income from foreign source is more than 15 lakh in the previous year, then second condition will be applicable, people. Second condition will be applicable, but instead of 60 days, it would be 120 days. Instead of 60 days, it is 120 days. That is the double. Clear? Yes. And 365 days will continue. It is not only 120. 120 along with 365. Both has to be satisfied. 120 days or more during previous year plus 365 days or more during 4 years preceding the previous year, guys. Hope you got it. Clear? So please be very careful with this point, because here whether second condition is not applicable or whether it is applicable or not depends on how much is the Indian income. How much is the Indian income, guys? So please be careful with it. Yes, sir. Then now coming to the deemed resident provision. Deemed resident. See, in all these points, number of days of stay in India was very important. Now, if an individual is not covered under section 6.1, then he can go and check section 6.1a, which talks about deemed resident. And under section 6.1a, number of days of stay is irrelevant, guys. Doesn't matter how many days you were in India during the previous year. So what are they focusing on? We will see. Only Indian citizen is covered here. Please be careful. Indian citizen having a total income other than the income from foreign sources is more than 15 lakh in the previous year shall be deemed to be resident in India if he is not liable to tax in any other country. So if you are an Indian citizen who has Indian income more than 15 lakh but not paying tax in any foreign country, then Indian government is ready to adopt you as a deemed resident. They are happy because you can bring more and more tax revenue to the government. That is why. Got it? So that is called deemed resident. And here, as I already told you, again and again I am repeating, number of days of stay is irrelevant. But please don't straight away go and check section 6.1 here, guys. First check whether the individual will fit in under section 6.1. Only if he is not covered under section 6.1, we will go and check 6.1a. Clear? And whenever an individual is covered in this point or this point, and if they become resident, they are always treated as not ordinary resident. That means in this and this case, no need to check additional conditions, guys. Even though they become resident, we don't check additional conditions. Is that clear? They're straight away not ordinary resident. Please be careful with it. Yes, in the question, sometimes they might confuse you by giving that in the last 5 years or 4 years or 7 years, they stayed in India for so and so many days and all. But please don't get confused, guys. Please don't get confused. I repeat once again, if an individual is covered as per this provision or this provision and become resident, then they are always called as not ordinary resident. No need to check additional condition. They may or may not satisfy. That doesn't matter here. They are always called as not ordinary resident. But one special thing to note here, guys, please listen here. Now assume I am an individual who is covered in this point, who is covered in this provision, but I satisfy the first condition. When I satisfy the first condition, should we check additional conditions? Yes, we need to check additional conditions. I repeat, if I am a person who is covered under this provision, my Indian income is more than 15 lakh, okay. In that case, if I satisfy the first condition, that is 182 days or more, should we check additional conditions? Yes. But if I am an individual who is covered in this provision, and if I have satisfied the second condition, which is 120 days or more and 365 days or more, if I have satisfied that and if I have become a resident, should we check additional conditions? No, we should not check. Got it? Yes. Fine, guys. And here they have used the word total income other than the income from foreign source. Sir, for calculating this, what should we include or what we should not include? Guys, very simple. For which I will go to section 5. So I have given one table for section 5 now in the next page. You can observe there. So total income other than the income from foreign source means, guys, we should not include the income from foreign source. So which is that income is last item. Last item. Clear? This we should not include. Clear? When income is earned and received outside India and there is no control or there is no profession set up in India, then it will fall in the last case, right? Yes, as per section 5, this is the income from foreign source. Actually speaking, even this is the income from foreign source, but somewhere the control is in India. That is why indirectly they're treating it as Indian income or Indian source. Clear? Yes, sir. Fine, guys. So, if I have to tell in another way, opposite way. Sir, total income other than the income from foreign source means what all should we include? 1, 2, and 3, guys. Is that clear? And the last one we should not include. Hope you got it. Clear? Yes, sir. Fine. So we are done with the residential status of individual. And with respect to the residential status of individual, I have given few points here. Let me just read it. The residential status has got nothing to do with citizenship, nationality, and place of birth or domicile. Domicile means the place where an individual has a permanent home. Hence, a person can be a resident in more than one country also. Or else, an individual can plan in such a way that they will not become resident in any country. Clear? For example, in India, every year they will stay for 59 days, 58 days, or 50 days, and they will travel to another foreign country, stay there, and they will make sure that they are not resident even in that country, guys. Got it? Yes. Next, for all practical purposes, the date of departure and date of arrival is taken to be in India. Please be careful, guys. While counting the number of days, please be careful. If an individual is coming to India from the date of arrival till the last day of the previous year, or in between the year, if they are leaving India, then till that day, you have to count the number of days in India. Clear? Including the date of arrival and date of departure. Sir, what if a person is leaving India during the previous year? Then from the beginning of the financial year, that is from 1st April till the date of departure, we need to consider it to be in India. Okay. Then the third one. Stay in India need not be continuous or active, nor it is essential that the stay should be at the usual place of residence, business, or employment of the individual. Where they are staying, with whom they are staying, for what purpose they are staying in India, does it matter? No. We will only check whether they are in India or not. Got it? Yes, sir. Then the last point we will see later. Okay, guys. So this is all about the residential status of individual. Now let us focus on the other category of persons. Now, the residential status of HUF, AOP and partnership firms is given in section 6.2, whereas the residential status of body of individual, artificial juridical person and local authorities is given in section 6.4. But I will cover both of them together because the criteria is same. Okay. For any of these persons, if the control and management of the affairs means business affairs, is only or partly in India during the previous year, they are said to be resident in India. Sir, what is that control and management? Where the policy decisions are taken, guys. Got it? Yes, sir. Even if one decision is taken in India, it is enough for us. Clear? So both as same criteria. Yes, sir. But for HUF, once an HUF become resident in India as per section 6.2, when they would be called as resident, guys, when control and management of its affairs is partly or only in India. So what if it is only outside India? Non-resident. If they are non-resident, we will stop it there. But if the control and management is only or partly in India, then they are said to be resident. Then we need to go and check the additional conditions, guys. We need to check the additional conditions. But on behalf of HUF, who has to satisfy both the conditions given under section 6.6 is the Karta. Not the HUF, but on behalf of HUF, Karta. Please be careful, guys. We are deciding the residential status of HUF. But on behalf of HUF now, who has to satisfy the additional conditions? Karta, who is the head of HUF. So what are the two additional conditions, sir? It remains same. it remains same here, guys. Clear? Yes. If both the conditions given under section 6 is satisfied by the karta, then HUF is said to be ordinary resident. If not, then HUF would be not ordinary resident. Is that clear? Yes. I would just like to explain this with a chart. Pay attention. Hello, look here, look here. Yes. So now we are deciding the residential status of HUF. Okay. Now residential status of Karta also should be decided. Yes, in his individual capacity, we would have already decided. For the residential status of Karta in his individual capacity, which all sections should be checked? Section 6.1, then 6.6. If not satisfied, then we can check even section 6.1a. Got it? Yes, that is in individual capacity. Now we are concerned about the residential status of HUF. Now, if Karta is ordinary resident in his individual capacity, then what would be the residential status of HUF guys? Ordinary resident. Clear? And about the control and management of HUF, if the question is silent, we always consider they are in India, guys. So they would be resident. Clear? Huh? Means if question is silent about the control and management of the affairs of HUF, we consider it to be in India. So assuming control and management of the affairs of HUF is in India, and if Karta is ordinary resident, that means he would have satisfied both the conditions given under section 6.6. Yes, sir. So what would be the residential status of HUF? Ordinary. Same way, what if Karta is a not ordinary resident? That means he has not satisfied both the conditions given under section 6.6. Yes, sir. So in that case, what will be the residential status of HUF? It is not ordinary resident, guys. Or else we call it as resident but not ordinary resident. Got it? Yes, sir. Then, if Karta is non-resident, can we straight away tell the HUF would be not ordinary resident? No. Please don't tell that HUF is a not ordinary non-resident. Guys, Karta is non-resident, but HUF's control and management is in India. That means they're resident. Now we are checking whether they are ordinary or not ordinary. That's all. Okay. Now please listen. If Karta is a non-resident, can I straight away tell HUF would be not ordinary resident? No. There can be one rare case where Karta might be non-resident, but still HUF can become ordinary resident. Sir, how is it possible? Assume guys, I am the Karta of an HUF. I am in India during the previous year only for 50 days. Whereas in the past, I was completely in India. So when I am checking the residential status of individual, that is me as a Karta in individual capacity, I would have not satisfied both the conditions. So I would become non-resident. Okay. Now for HUF, they will check if Karta satisfy both the conditions given under section 6.6, then HUF will be ordinary resident. Yes. I told that in the past, I was completely in India. So that means I would have satisfied both these conditions. Yes. So for HUF, Karta has satisfied both the conditions given under section 6.6. That means the residential status of HUF will be ordinary resident, guys. Is that clear? Yes, sir. This can be one rare case. Whereas if Karta has not satisfied both the conditions given under section 6.6, then we call it as not ordinary resident. Guys, please listen carefully here. I know somewhere you might be little confused. I will clarify it. Listen here. Now, if Karta in his individual capacity, if he doesn't satisfy both the conditions given here, we don't check additional conditions for him to decide the residential status of whom? Of Karta. But now assume a Karta in his individual capacity has become non-resident. But for HUF, can we check these additional conditions? Yes. Now, even though Karta is a non-resident in his individual capacity, but if he satisfied both these conditions, then HUF can become ordinary resident, guys. Hope you got it. Clear? Yes, sir. Fine. Let us move forward. Next, section 6, subsection 3 talks about residential status of company, every company. Okay. Indian company will always be resident in India, guys, no matter what. Okay. Whereas coming to a foreign company, that is other than Indian company, they are said to be resident in India only if poem is in India. Sir, what is poem? Place of effective management. That is again where the decisions are taken. Where the decisions are taken, guys. Key management decisions. Okay, sir. Sir, what about the poem of Indian company? Guys, the poem of Indian company doesn't matter. Whether it is in India or outside India, it doesn't matter. Indian company will always be resident in India. Okay, sir. Then coming to section 6, subsection 5, will tell one residential status for all sources of income. Now, an assessee might have income from different sources, or he might have income under all the 5 heads. Should we check the residential status for each and every head or for each and every source separately? No need, guys. No need. There will be one residential status for entire income of an assessee for one previous year. And the residential status has to be checked for each and every year separately, which means once if I become resident, is it like I am resident forever? No. We need to determine the residential status for each and every year separately for each category of person. That is what is given in section 6.5. Is that clear, guys? Yes. Now, coming to the individual and HUF, there are three possibilities totally. What are those? Ordinary resident, not ordinary resident, non-resident. Whereas for any other category of persons, the second stage will not come, guys. They are either resident or non-resident. And when they are resident, we always consider them as ordinary resident, guys. Is that clear? That is what I have given in the fourth point. You can see here, this one. It must be noted that only an individual or HUF can be ordinary resident, not ordinary resident, or non-resident in India. So there are three possibilities. Whereas for others, all other associates can be either resident, which is ordinary resident, or non-resident in India, guys. Got it? Yes, sir. Then we have one last point with respect to individual. This is with respect to individual only. Yes, this is the rule. That is why I am covering it last. Okay. What is this rule telling? We will see. According to Rule 126, an individual being a citizen of India and a member of crew of a ship, the period of stay in India in respect of eligible voyage. Sir, what is eligible voyage? Guys, eligible voyage means which is carrying the passenger and goods in the international traffic. Sir, what is it? Guys, either the origination port or destination port is in India and the other one is outside India. Either of them, one should be in India, the other one should be outside India. For example, if origin point is in India, destination should be outside India. Or else if destination is in India, origin should be outside India. We call it as eligible voyage. I repeat once again, eligible voyage means which is carrying the passengers or goods in the international traffic. That is either of the point, that is either original or destination point should be in India and the other one should be outside India. Okay, sir. Shall not include the period beginning from the date of joining till the date of signing off as mentioned in continuous discharge certificate. So for these people who are working as a member of crew of ship, they would be issued a document called continuous discharge certificate in which on what day they are joining the ship, on what day they are signing off from the ship will be mentioned. So that time gap will be considered to be outside India, guys. From the date of joining the ship till the date of signing off will be considered to be outside India. Sir, here should we consider territorial water or the exclusive economic zone and all because it is a part of India? No, no, guys. The date they join the ship and till they sign off from the ship is considered to be outside India. Clear? Because few days the ship might be still within the territorial waters of India. Do we consider that number of days of stay is in India? No. Got it? This is the important rule. We have one question on it. We will see it. Yes, guys. So this is all about the residential status of different category of person as per section 6, guys. Now we will go through some questions on residential status. I have given good number of questions on residential status covering all the different possibilities, guys. And here, especially individual. Residential status of individual would be very important because that is where the student would get confused. And that is where the institute want to ask the questions, guys. And whenever you are checking the residential status of individual, firstly, take care of two things, guys. First, check whether such individual is covered in the explanation. Explanation means these two cases, guys. Okay, including this one, it will be totally three cases. check whether an individual is covered in any of this special case. Then check how many days he or she was in India during the previous year. Clear? These two things you have to be very careful. Then rest of the things you can manage it. Yes, sir. Fine, guys. So we'll quickly go through these questions. First one. Mr. Rishi, a British national, comes to India for the first time during the previous year, 21-22. During the previous year, so and so, he stayed in India for 55 days, 60 days, 80 days, 160 days, and 70 days, respectively. Determine his residency status. Guys, first thing I need to check, is he covered in explanation? No, because he is a British national. Okay, sir. Then, during the previous year, how many days he or she was in India? For 70 days. So that means straight away, first condition is ruled out. First condition is ruled out. For him, is second condition applicable? Yes, sir. 60 days or more during previous year and 365 days or more during 4 years preceding the previous year. Check how many days he was in India. 60 days, sorry, 70 days during the previous year. Okay, this is satisfied. Then last 4 years put together 355 days. So 365 is not satisfied. So both the conditions are not satisfied under section 6.1. So you would be a non-resident in India, guys. Got it? Yes, sir. Second question. Mr. Ram, an Indian citizen. Okay, Indian citizen. Please be careful. He is living in Delhi since 1960. He left for Japan on July 1st, 2020 and comes back on August 7, 2025 to India for a visit. So he is coming back to India for a visit. Guys, when did he go? In 2020. He is coming back in 2025. So can we understand that he was engaged in any business or employment outside India? Yes, because this point talk about it. An Indian citizen or a person of Indian origin, if they are engaged in business, employment or profession outside India, and during the previous year they are coming to India for a visit, and if their total income is within 15 lakh, then no second condition. If it is more than 15 lakh, then second condition is applicable, but instead of 60 days it would be 120 days. Correct? Yes. And here BEP stands for business, employment or profession, guys. Okay, sir. Fine. So he's coming to India on 7th August 2025 and he is not going back. Nothing with respect to return is given in the question. So we'll assume that he is in India till 31st March of the previous year. Okay. So how many days he is in India? We need to count from 7th August till 31st March. 7th August to 31st March. And here please be very careful, guys. Few months will have 31 days and all. So you have to be very careful with it. One day plus or minus also you will lose marks. Yes, sir. So is he covered in explanation? Yes, guys. You can see here, I have given him. If an Indian citizen engaged outside India in an employment or a business or a profession has come to India on a visit during the relevant previous year, then the second condition is not applicable because they are covered in explanation. Yes, sir. So how many days he was in India, people? From August 7th to 31st March. So it comes to 237 days. So did he satisfy the first condition? Yes, he is a resident. He is a resident. And when he is covered in the explanation, whether year or year, okay, because the income is not given in the question, doesn't matter because they are satisfied first condition only. Here, see, if he has not satisfied first condition, then income was relevant, whether to decide this point or this point. But in this given case, Ram will fall under first condition. He is satisfying first condition. That means, should we check additional conditions for him? Yes, guys. So please be careful. In this question, even though they are not given the total income other than the income from foreign sources, it will not have impact on our answer. Because an individual is satisfying the first condition given under section 6.1 here. Even though it's covered in explanation, still for him, he is satisfying first condition, guys. So please be careful. Clear? Whether, see, I repeat again, if by chance, if they had given Indian income, that is secondary. But here it is not given. But will it matter for our answer? No, guys. Why? Because he is satisfying first condition. If in case, if Indian income was given and assume he is not satisfying first condition, if Indian income is up to 15 lakh, then he would be covered here. When second condition is not at all applicable. Okay. Sir, what if Indian income is more than 15 lakh? Then he will come here. In such case, second condition will be applicable, but instead of 60 days, it would be 120 days. Is that clear? Yes. So this is a different kind of question. So please be very careful with it. Okay, guys. So is the resident now? Yes. Once is the resident, by satisfying the first condition, we will go and check the additional conditions. Yes, sir. Now, did he satisfy both the conditions? Yes. See, nothing with respect to his past they have given in detail in the question. But they are told before 1st July 2020 was in completely in India. So if I take last 10 years and 7 years as per section 6 subsection 6, will it satisfy both the conditions given under section 6.6 guys? Yes. You can see here, I have given a sentence. As Mr. Ram left India on 1st July 2020, it is assumed that prior to that he was staying in India completely. So it is understood that numerically we cannot prove it. It is understood that he has satisfied both the conditions given under section 6.6 guys. Because when you are counting this 7 years and 10 years, you can see even the time period before 1st July 2020 will come. In such case, as he was in India completely before that, he would have satisfied both the conditions given under section 6.6 guys. Clear? Yes. So he is a ordinary resident people. Or let us move to the next question. Brett Lee, an Australian cricketer player, visits India for 100 days in every financial year. This has been his practice for the past 10 financial years. Okay, every year is coming to India for 100 days. Determine his residency status. So how many days he was in India during previous year? 100 days. So first condition ruled out. Second condition, period of stay during 4 years preceding the previous year is how much? 100 into 4 comes to 400 days. So did he satisfy the second condition guys? I will just take up here. Yes. Yes. And see, for the first two question I have given, how do you present the answer exactly in the exam if it is a descriptive type question. Okay. Whereas for the third question, I have just to the point. I have given the answer to the point. Okay. Yes. And if you want, please pause the video and go through the answer in detail, guys. Read line by line. I'm going little faster because I just want to explain you how to apply the provisions or how to decide the residential status in the different scenarios. Okay, sir. So he is satisfied the second condition given under section 6.1. So you would be resident. Then should we check the additional conditions? Yes, sir. But one of the additional condition is not satisfied because in the last 7 years he would be in India for 100 into 7, 700 days. Whereas the condition is how much? 730 days or more. So he didn't satisfy. He didn't satisfy. So he will be not ordinary resident, guys. Got it? Yes. Next. Would your answer change if the above fact relate to Srinath, an Indian citizen who resides in Australia and represent Australian cricket team? So he is an Indian citizen, Srinath now. Instead of Bretley, it is Srinath. If the above fact relate to Srinath, an Indian citizen who is residing in Australia comes to India for a visit every year for 100 days, he would be treated as non-resident in India irrespective of his total income, excluding the income from foreign sources, since his stay in India in the current financial year in any case is less than 120 days. So where does he fall? Now, Srinath is engaged in any profession outside India and is coming to India during the previous year for a visit. Yes, sir. For how many days? 100 days. And they have not given how much is his Indian income, whether it is up to 15 lakh or more than 15 lakh. In both the case, he is non-resident, guys. How? Assuming Srinath's total income other than the income from foreign sources up to 15 lakh. Then second condition is not at all applicable for him. First condition is 182 days or more, but he is coming to India every year only for 100 days, so non-resident. Second case is, what if the Indian income is more than 15 lakh? Then second condition is applicable, but instead of 60 days, it is 120 days. But he is coming to India for every year. For how many days? 100 days. So did he satisfy this? No, guys. He didn't satisfy because 100 days is less than 120 days. So he would be non-resident. Irrespective of his total income other than the income from foreign sources, he would be treated as non-resident, guys. Okay, so next, there is last part. See, what would be your answer if Srinath had visited India for 120 days instead of 100 days every year, including previous year 25-26? 120 days. Now, Indian income is important. What is it? Guys, I will explain here. See, if his Indian income is up to 15 lakh, then he will fall here. In that case, second condition is not at all applicable and he is not satisfying the first condition, so he would be non-resident. Sir, what if his Indian income is more than 15 lakh? Then we need to answer from both the point of view because the question is silent about Indian income. If his Indian income is more than 15 lakh, then 120 days or more satisfied? Yes. And 120 into 4, will it be more than 365 days? Yes. So he has satisfied the second condition given under section 6.1. So straight away you would become what? Not ordinary resident. Sir, should we check additional condition in that case? No, guys. Please don't check it. Is that clear? Because he is covered in this provision and is satisfying the second condition given under section 6.1 to become resident. In that case, you would always be not ordinary resident. And if you ask me, sir, if in case Srina's total income other than the income from foreign source is more than 15 lakh, is covered in this provision, but he satisfied the first condition itself, sir. He satisfied the first condition itself, sir. So in that case, should we check additional conditions? Yes, guys, we need to check. We need to check. Hope you understood. Is that clear? Yes, sir. Next, fourth one. Dr. Shetty, an Indian citizen and a professor in IIM Lucknow, left India on September 15, 2025 for USA to take a professor job in MIT, USA. Guys, this case is covered in first special case. Is that clear? In which Indian income doesn't matter. Okay, sir. Determine his residential status. So when did he leave? On 15th September 2025. So from 1st April to 15th September, we need to count the number of days to be in India, including 15th, including 15th September, guys. Is that clear? Yes. Let us see how many days he was in India. 168 days. 168 days. So he didn't satisfy the first condition. He didn't satisfy the first condition, and second condition is not at all applicable for him. So what is he, guys? He is a non-resident. He is a non-resident, guys. Is that clear? Yes. And fifth question is actually on rule 126, which I have given at the bottom. Rule 126. So I will quickly just tell about the calculation. Mr. Anand is an Indian citizen and a member of crew of a Singapore-bound Indian ship engaged in carriage of passengers in international traffic. So is it an eligible voyage? Yes. Departing from Chennai port on June 6, 2025. Okay, guys. So departing, that is, origination port is in Chennai, whereas the destination is in Singapore, guys. Okay. From the following details for the previous year 25-26, determine the residential status of Mr. Anand for assessment year 26-27, assuming that his stay in India in the last 4 previous years, preceding the previous year 25-26 is 400 days, and the last 7 previous years, preceding previous year 25-26 is 750 days. Okay. Date entered into continuous discharge certificate is in respect of joining is 6th June, in respect of signing off is 9th December. So whatever is the time period in between this, guys, from 6th June to 9th December, no, is considered to be outside India. So we need to count it, and while counting, we need to consider both 6th June as well as 9th December to be outside India. Please be careful. Okay. So how many days it comes to? 187 days. The time gap between 6th June to 9th December, including both the days, is coming to how much, guys? 187. 187. So 187 days is in India or outside India? Outside India. So remaining days is considered to be in India. Yes. Question is silent. Did he go again and did he go outside India during the previous year? No, guys. Question has not mentioned anything about it. So we'll assume remaining 178 days he was in India. He was in India. So did he satisfy the first condition? No. And second condition is not applicable for him. Why so? Because he is covered in this special case. He is covered in this special case. So second condition is not at all applicable. First condition is applicable, but he didn't satisfy. So he would be a non-resident, guys. Non-resident. Yes, sir. And in the question, you can see some irrelevant information they have given here. Please don't get deviated from those informations. Yes, sir. Because they will try to mislead you through such informations, guys. Yes. Question number 6, quickly. Mr. Rocky is an Indian citizen working in USA with Microsoft Incorporation during the previous year 24-25 and 25-26. He visited India for 179 and 155. Okay. First, I need to log how many days he was in India during previous year. 155. First condition already ruled out. First condition already ruled out, guys. His stay in India for so and so previous year is 120, 100 and 155 days respectively. Okay. Is income from for previous year 25-26 is as follows. So we need to check which is an Indian income, which is not an Indian income, guys. Okay. Income from salary, rent, and interest earned in USA. It is not an Indian income. Then income from business in USA, controlled from USA, not an Indian income. Then income from business in UK, controlled from India. Is it an Indian income? Yes, guys. Actually speaking, again I am telling you, it is actually not an income from Indian source. But still, as per section 5, are they taking it here? Yes. That will fall in this point. Is that clear? Yes, sir. Fine. I will go back. Next, interest on bank FD in SBI Bank at Mumbai. So it is also in Indian income. Then LIC premium paid in India for rupees 1,40,000. Guys, for this, deduction is available under section 80C provided Mr. Rocky is following optional scheme. Let us assume that he is following optional scheme. Okay. Determine his residential status for assessment year 26-27, guys. Oh. First, let us decide what is the total income other than the income from foreign source. How much is that? It comes to 16,60,000, guys. How is it? 8 plus 10 minus 140. For 140, deduction is available under 80C, guys. Maximum is 150, but here it is only 140, so we will claim full. So 16,60,000 is the total income other than the income from foreign source. Yes, sir. So he is in India for how many days during previous year? 155. Okay. In that case, first, where will he fit in, guys? Where will he fit in? Sir, in this scenario. He will fit in this scenario. So, second condition is applicable, but instead of 60 days, it would be 120. Anyway, first condition is not satisfying. Okay, sir. So, last 4 years, you check how many days he was in India? 554. 554. We need to add all this. So, he's coming to India for a visit. Okay. So, last 4 years, how many days? 179 plus 120, 100 plus 155, guys. Okay. Yes. So it comes to 554 days. Okay. So did he satisfy both the conditions which comes under point 2? Yes, sir. He satisfied both. So he would straight away become what? Not ordinary resident. No need to check additional conditions, guys. Yes, sir. So he's resident but not ordinary resident. Then seventh one. Would it make any difference? Mr. Rocky is a US citizen, but his grandfather was born in a village near Peshawar, part of Pakistan now, in 1945, undivided India. So, Mr. Rocky is a person of Indian origin. No, the answer would remain same as the above provision is applicable for Indian citizen as well as person of Indian origin. Please observe, guys. Here, Indian citizen as well as person of Indian origin both are covered. Clear? And obviously, all the information given here till here will carry to here also. Only the income part, if it is up to 15 lakh, it is given here. If it is more than 15 lakh, here, guys. So Rocky is a person of Indian origin. So will the answer remain same? Yes, guys. It will come under this. Yes, sir. So Mr. Rocky is a person of Indian origin as his grandfather was born in a village near Peshawar. So the answer would remain same, guys. Next, eighth one. Suppose in question 6, Mr. Rocky's bank interest is 8,20,000 instead of 10 lakh. What will be your answer? So the total income other than the income from foreign source would become 14,80,000. 14,80,000. In that case, he will fall under this provision. In that case, second condition is not at all applicable. He has to be in India for 182 days or more during the previous year in order to be resident in India. But he came to India during the previous year how much for how many days? Only 155 days. So he didn't satisfy the first condition, whereas second condition is not applicable for him. So he will be a non-resident. He will be a non-resident, guys. Okay, sir. Ninth one. Pushpa is an Indian citizen, currently is in employment with an entity in Japan. During the previous year, he visited India for 58 days. So section 6, subsection 1, both the conditions ruled out. He is not covered. During the previous year 25-26, he is not taxable in Japan or any other country by reason of his domicile or residence. Guys, they are giving a link to section 6(1)(a), deemed resident. Determine his residential status for assessment year 26-27 if his total income other than the foreign source income is 22 lakh or 14 lakh 50,000. Okay. Guys, if it is 22 lakh, then straight away you would be a deemed resident. as per section 61A because it is more than 15 lakh. Sir, what if it is 14 lakh 50 is non-resident? Is non-resident. So you can see in the first case, he would be deemed resident as per section 61A, and whenever he is a resident as per section 61A, he will always be not ordinary resident. Clear? Yes, sir. Sir, what if the total income other than the income from foreign source is less than 15 lakh? That is actually it is 14 lakh 50. Then he is a non-resident. Then he is a non-resident. Is that clear? So these are the questions on the residential status of individual. I also have few questions on the residential status of other category of persons, and also I have given good number of additional questions on the residential status. Guys, you can just go through all this. If you want, you can pause this video and go through all these questions one by one, and you can find this question bank under the free resources on our website. I would suggest you please download it and go through all the questions so that you will be thorough with the concept of residential status. Because in this video, I have tried to go through all the questions on the residential status of individual really in a quick way. If by chance if you were not able to catch it, or if you have any confusion here and there, I would suggest you please go through the solution, and I have given the solution the way it has to be presented in the exam, especially if it is asked as a descriptive question. Please follow it. I would suggest you please practice writing few of the questions at least. Got it? Yes, now we will learn scope of total income, which is given in section 5. Section 5 has to be read along with section 7 and 9, for which a connection is given in section 5, guys. Section 5 has two subsection. Subsection 1 talks about what incomes are taxable for a person who is ordinary or not ordinary resident in India. Whereas subsection 2 talks about what incomes are taxable in India if a person is a non-resident. So totally there are three possibilities, but all three simultaneously cannot happen, guys. Any one. A person can be either ordinary resident or not ordinary resident or non-resident in India during the previous year. But the middle one, that is not ordinary resident, is relevant only for individuals and HUF. Whereas for other category of person, as we learned here, they can either be ordinary resident or non-resident. Is that clear? Yes. With that, we will get into section 5, guys. So we have just divided this into 3 points here. If income is received in India or deemed to be received in India, it is always taxable, guys. Irrespective of the residential status of a person, it is always taxable. Then, if an income which is earned in India, the term what they have used here is which accrues or arises in India or deemed to accrue or arise in India, in simple, which is earned in India, it is always taxable. We actually call this two as Indian income. Actually speaking, these are the two Indian income. But in section 5, they have tried to include one more item also. What is it? We will see. Income which is earned and received outside India, but from a business controlled from India. Control is in India. Decisions are taken in India. Or profession set up in India. Profession set up means, assume I am practicing chartered accountant. I have set up my practice in India. Now I am going to US, giving service to the client there. Earned the income there, received the income there. But if I am an ordinary or not ordinary resident, it is taxable in India. Got it? Yes. Same way. Assume there is a subsidiary company for Reliance in Dubai. In Dubai, where the decisions are taken in India. Business is carried on outside India, earned there, received there, but the control is in India. So, if such company is ordinary or not ordinary resident, then the income will be taxable in India, guys. Whereas if they are non-resident, not taxable. Is that clear? Any other source means when income is earned and received outside India, no control, no profession is set up in India. For example, I have earned an income and received outside India, no control, nothing is in India. Then it will fall in the last case. It will be taxable only if an assessee or if a person is the ordinary resident, guys. So for ordinary resident, global income would be taxable, guys. Is that clear? And I have written here FS. FS means foreign source. Clear? Even for section 6, we learned the total income other than the income from foreign source, right? For this points, it was relevant for this 3 points. Yes. What and all it will include is only 1, 2 and 3A. Whereas 3B will not be counted for, which we will consider it as income from foreign source. Actually speaking, again and again, I'm telling you guys, even this income actually it is earned from foreign source. But for income tax purpose, they're trying to show it as the control is in India, we will indirectly treat it as Indian income. Is that clear? Yes, sir. Whereas for non-resident, only the income earned or received in India is taxable, which I call it as Indian income. Clear? Indian income here means only this two. Whereas for section 6, please be careful. Total income other than the income from foreign source means it will include 1, 2 as well as 3A, guys. Please be very careful. Yes, sir. Fine. So now coming to points to remember. When once an amount is received, assume guys, I have earned an income, I have received it. Is it my income? Yes. Later I transferred it to my parents or my wife or to my children's. Will it be considered as income for them again? No. Transfer or remittance doesn't amounts to received, guys. Is that clear? Now if my employer paid to me and if I receive it, it is an income for me. Once I earn and receive it, later if I transfer it to any of my family members and all, is it considered as income for them again? No. So if there is any transfer or remittance, that will not amount to income received, guys. Okay. Next, second point. Any past, just a minute, I will mark it. Yes. Any past untaxed foreign income, if it is brought into India, is not taxable in the hands of any assessee. In any of this case, it will not be taxable, guys. Okay. For example, assume guys, I had earned around 10 lakh in USA in the year 2015-16. I was supposed to pay tax in USA, but I have not paid. Now, during the previous year 25-26, I am bringing this money into India. Will they allow me to bring it? Yes, without paying any tax in India. Because this is a loss of revenue for which government? US government. Now, Indian government is allowing me to bring that money into India without paying any tax because it is not a loss to Indian government, guys. Is that clear? Yes. Then last one. Any exempt income will be excluded from the total income of every assessee. So when you are asked to calculate the total income or gross total income of an assessee, if there is any income earned by the assessee or a person which is exempt under Income Tax Act, please exclude it, guys. If it is fully exempt, completely exclude it. Don't include it in the total income calculation. Sir, what if it is partly exempt? For example, assume I have interest on post office savings deposits 5,000, but it is exempt to the extent of 3,500. Yes. So 5,000 is received minus 3,500 is exempt. Remaining 1,500. Should we include it in the total income calculation? Yes. And also for this, deduction is available. Clear in chapter 6A. Yes. But deduction is not available for every assessee. It is available only for the assessee who is following optional scheme because majority of the deductions are blocked under section 115 BAC, that is default scheme. Yes. Sir, what if there is any deductions available to the assessee and if he is following optional scheme? You provide for the deductions. You provide for the deductions. And if in case, if it is an income based deduction, first include the income in the gross total income calculation and then give the deduction under the respective section, guys. Yes. You can just see, just a minute, I will show some questions. Yeah, you can see on. So if you are calculating the total income of an individual, I have given under three different scenario. All three might not be asked in the exam, but just for practice in the classroom, I would have done that. Clear. So when the assessee has an income, interest income he has, first include it in the total gross total income calculation, then give deduction. And this is available only under optional scheme. Please be careful. Same way, guys. Clear. And in this question, there is no deductions. So straight away, just add up everything. Whatever is the income taxable in the hands of the respective person, depending upon his residential status. Yes, sir. Next, section 7. Now, in section 5, when we were talking about what incomes are taxable, there we saw income received or deemed to be received. Sir, what is the deemed to be received? It is given in section 7, guys, as if received. The person would have not received this money in the previous year, but still as if he has received it because he is the ultimate beneficiary. So what is it is given in section 7. We'll quickly see it. In addition to the income actually received by the assessee or on his behalf, certain other incomes not actually received by the assessee and or not received during the relevant previous year are also included in his total income for income tax purpose. Sir, why is it? Is it unfair, sir? Clear. Sir, why? Because even though he has not received, we are considering this as income. Yes, he has not received it, but he is the ultimate beneficiary, guys. Sir, how is it? I have given some example. You can see some of the examples of such incomes are annual accretion, that is employer contribution to recognized provident fund to the extent it is taxable. Transferred balance from unrecognized provident fund to recognized provident fund, because when a balance is transferred from unrecognized provident to recognized provident fund, the whatever amount is getting transferred will be taxable in the hands of the employee, guys. Okay. Then employer contribution, that is the central government or any other employer, to the national pension scheme of the employee. Let me try to explain this with an example, guys. Ah, listen here. This is somewhere connected to salary head. Hope you guys already have an idea about it. Now, for recognized provident fund of an employee, both employee also will contribute as well as employer will contribute. Now, assume employer is contributing 15% of salary to the recognized provident fund of the employee. So this is an account which is opened in the name of employee, but who has opened it? Employer. Every month, both employee as well as employer would be contributing an amount to this account, guys. Okay. Now, how much employer is contributing? 15%. But as per section 10 clause 12, only 12% is exempt. 12% of salary is exempt with respect to employer contribution. That means remaining 3% is taxable. Yes. For whom? For employee. Under which heads the salary head, IFS, that is income from salary. Sir, when is it taxable? In the year in which it is contributed. Sir, but employee is not directly receiving the money, no, sir. Yes, whatever money is there in the recognized provident fund, it is for whose benefit? Employee can withdraw this money whenever he wants or at the time of retirement. So the ultimate beneficiary is employee. So even though he has not directly received the amount, money has gone to an account which is opened for the benefit of employee. So the 3% of salary will be taxable as salary income in the hands of employee in the year in which it is contributed by employer. Same way. Assume on whatever balance is there in recognized provident fund, actual interest earned is 10%, guys. Actual interest earned is 10%. But interest is exempt up to 9.5%. That means remaining 0.5%, is it taxable? Yes, it is taxable. Remaining 0.5% is taxable, guys. Is that clear? Yes, sir. Hope you got it. Hope you got it. Yes, sir. Fine. Chalo. Same way. Now, if unrecognized provident fund is opened in the name of employee, then when the amount is withdrawn, it is fully taxable. But what did employee or employer did was, he had opened unrecognized provident fund, but after few years, they are converting that into recognized provident fund. In such case, whatever money is transferred from unrecognized provident fund to recognized provident fund, it will be taxable in the hands of employee in the year in which it is transferred. Because in the future, when the money is withdrawn from recognized provident fund, it will be fully exempt, guys, provided at least 5 years of continuous service is rendered by employee. Same way, employer contribution to national pension scheme will be included in the salary income of employee under the head salary. And later, deduction is available under section 80CCD for both employer as well as employee contribution, subject to some limit, guys. Clear? Which we will learn in deduction chapter. Okay. Next, we'll move to section 9. So, if income which accrues or arises in India or deemed to accrue or arise in India is always taxable, no matter what is your residential status. Yes, sir. What is this deemed to accrue or arise in India? As if earned in India. As if earned in India. Yes. So what is it? We will see. The following income shall be deemed to accrue or arise in India. Any income accruing or arising to an assessee in any place outside India, whether directly or indirectly, through or from a business connection in India. Sir, what is business connection? If any non-resident is carrying on any business activity in India through an agent, whatever they are earning from a business activity carried on by them through an agent in India is considered to be income deemed to accrue or arise in India, and it is always taxable. When income is deemed to accrue or arise in India, it is always taxable, no matter whether you are ordinary, not ordinary, or non-resident. Clear? Because it will fall in this point, guys. It is always taxable. Got it? Yes. Okay. Next. Through or from property in India, or through or from any asset or source of income in India, or through the transfer of capital assets situated in India. Now, guys, assume assessee or a person has any asset or capital asset or property in India. If they are letting it out and earning rental income, they might be receiving this rental income outside India or in foreign currency, doesn't matter. As the asset is in India, source is in India, income is deemed to accrue or arise in India and it is taxable. Sir, what if this asset is sold? Then we need to compute capital gains income, and capital gains income is deemed to accrue or arise in India and taxable. And in the question, sometimes they may confuse you by telling the registration is done outside India, sale consideration is received in foreign currency outside India, and all. It doesn't matter, guys. The property is in India, the source is in India, so income is deemed to accrue or arise in India and hence taxable. Okay. Second, income which falls under the head salaries if it is earned in India. Salary payable for service rendered in India will always be deemed to accrue or arise in India and it is taxable, guys. Yes. Now, even if employment service is rendered in India, employee now retired and is went and settled in US or UK or any foreign country is receiving pension there. Still, even that pension income will be deemed to accrue or arise in India. Why, sir? Because what is the root for this pension income? Employment, employer-employee service or relationship. Correct? Employer-employee relationship, and it was in India. So, if I am a person who was rendering employment services in India, and during my employment, if I am earning any salary income, including perquisite allowances, it will be taxable in India. Now, after retirement, if I am getting any pension, whether I am in India or outside India, it doesn't matter. It is an income deemed to accrue or arise in India because the employment was in India, guys. So, after retirement, or if there is any leave period for which salary is paid, and if that leave period salary, whatever is paid, is due to an employment which is in India, then it is income deemed to accrue or arise in India, guys. Okay, sir. Then, next point. Third, income from salaries which is payable by the government to a citizen of India for services rendered outside India. Now, many of the people will be working in Indian embassies, which is set up outside India, clear, or they would be working as a spy or insider for Indian government, but they are working outside India. Yes, sir. So they are an Indian citizen for whom the salary is paid by central government, but they are rendering the services outside India. But still, whatever salary is paid by central government will be considered as deemed to accrue or arise in India. But for them, all the allowances and perquisite would be exempt, guys. All the allowances and perquisite would be exempt, which we'll learn in salary chapter. But basic pay, bonus, commission, and all will be taxable. Oh, next point. Fourth one. Dividend paid by Indian company outside India would be taxable in the hands of shareholder at the normal rate. Dividend income is always a normal income which is taxable at normal rate, but only for surcharge purpose. Whatever tax we calculate on dividend income, the maximum surcharge is 15%, guys. Whereas with respect to gross tax calculation, dividend income will always be normal income. So if an Indian company is declaring dividend and paying it outside India for foreign investors or foreign portfolio investor, still it is an income deemed to accrue or arise in India and taxable. Okay. Then 5, 6, 7 talks about interest, royalty, and fee for technical services, which I have covered by way of single chart. The provision is same for all three, guys. That is why I have covered it by way of single chart. Let us learn it. Interest, royalty, or fee for technical services is deemed to accrue or arise in India for a recipient who is a non-resident. Okay, recipient is a non-resident. If it is payable by. Now, who is payer? There are three possibilities. Who is the payer? Three possibilities. Recipient is always non-resident. Okay, now? Yes. Sir, what if recipient is the resident? Then always taxable, no? Why, sir? Because for them, global income is taxable. Is that clear? Yes. Okay. If recipient is a non-resident, then we need to check who is the payer. If payer is a resident in India, then normally it is income deemed to accrue or arise in India. But in the following two cases, it is not an income deemed to accrue or arise in India and hence not taxable for non-resident. Guys, please be careful. What are the three possibilities I have given here is for payer, not for payee. Who is the payee? Who is the recipient? Non-resident. Yes, sir. Okay. Now, if the payer is a person resident in India, normally it is taxable in the hands of recipient, receiver. But in the following two cases, it won't be taxable. When is it? If the money is borrowed and used, or technical services or royalty services is used for the purpose of business or profession outside India, then whatever the recipient is earning in the form of interest, royalty, or fees will not be deemed to accrue or arise in India and hence not taxable, guys. Okay, sir. Then, so if the money borrowed and used is for technical or royalty services, is for making any money from any source in India, for making any money from any source in India, it is taxable. But if it is outside India, if it is outside India, please be careful. Both the points is outside India. Then income is not deemed to accrue or arise in India. I will combine both these points. Whatever I have given in red is not an income deemed to accrue or arise in India. If the money borrowed or if the royalty services or technical services is used for business or profession outside India, or it is used for making any money outside India, then such income which is received by a non-resident in the form of interest, royalty or fee is not deemed to accrue or arise in India and hence not taxable. And hence not taxable. That means indirectly, if this is in India, then it will fall in this case. So is it taxable? Yes, sir. Yeah. So whatever was given here, they have given it in a reverse way here. Sir, what if the payer is a non-resident? Payer is also non-resident. Recipient is also non-resident. Then they are telling it is taxable in the hands of recipient only if what was given here, no, it is given in a reverse way. What is it, sir? If the money is borrowed and used for the purpose of business or profession carried on in India, or if technical services or royalty services are utilized for the purpose of business or profession in India or for making income from any source in India, then it is an income deemed to accrue or arise in India and hence taxable in the hands of non-resident, guys. Is that clear? In this case also, sir, what if it is outside India? Then obviously it is not an income deemed to accrue or arise in India. Sir, you have confused us by giving like this. No, guys, actually, this is how it is given in the law also. Clear? But you need not worry. Whatever is given here, no, outside India, but here it is in India. Clear? And whatever I have mentioned in green is an income deemed to accrue or arise in India and hence taxable. Got it? Yes, sir. But one small change is there. Please be careful. Here, if money is borrowed and used for the purpose of business or profession carried on in India, it is deemed to accrue or arise in India. Sir, what if money is borrowed and used for making any income from any source in India? Then that point is missing here. Please be careful. For example, assume I am a non-resident. I borrowed a loan from you. You are also a non-resident. You are also a non-resident. Okay, I repeat. I borrowed a loan from you and you are a non-resident and I am a non-resident. Both of us are a non-resident. Okay. Now I have to pay interest to you. So I am a payer who is a non-resident. Now you are earning the interest income. You are also non-resident. Okay. Now whatever loan I have borrowed, I am using it. Assume I have invested in any bonds or shares in India from which I am earning dividend income or interest income. So in that case, for you who is earning interest income, is it deemed to accrue or arise in India? No, guys. As whatever money I have borrowed from you, I am using it for earning any income in India. That point is not covered here. That point is not covered here. Whereas for royalty services and technical services, it is covered. Whereas for money borrowed, it is not covered. So in such case, whatever interest I am paying for you for the loan borrowed is not an income deemed to accrue or arise in India. Is that clear? Yes. And if the payer is the government, it is always taxable. Which governments, sir? Central government, state government, local government, whichever government. And here for what purpose money borrowed is used or for what purpose royalty services or technical services is used doesn't matter. It is always taxable in the hands of recipient because it is an income deemed to accrue or arise in India, guys. Is that clear? Yes. You can just pause for a minute and go through this because it's slightly confusing, I know, but I have tried to explain it in the best possible way. I have also given the points in different colors so that you will understand. Yes, green means it is an income deemed to accrue or arise in India, whereas red, it is not a income deemed to accrue or arise in India, guys. Oh, let us move to clause 8. Any sum of money paid by a resident Indian to a non-corporate, non-resident or a foreign company. Section 918. What is it? Let me read and then I will explain. Income arising outside India being any sum of money paid without consideration by an Indian resident person to a non-corporate, non-resident or a foreign company, okay, would be deemed to accrue or arise in India if the same is chargeable to tax under section 56 to 10, which talks about gift taxation under the head other sources, guys. That is nothing but if the aggregate of such sum received exceeds 50,000. So I will try to explain this. Yes, through this example. Assume, guys, resident, the person who is resident in India is giving more than 50,000 money to a non-corporate, non-resident. Non-corporate means other than company, okay, or a foreign company, or resident but not ordinary resident. Any of these three people is a recipient. Okay, where is this money given? Outside India. To whom? For any of this. And in return, what are they giving? Nothing. Nothing they are giving. So that means, can I consider this as a gift? Yes. And if it is more than 50,000, it is taxable in the hands of receiver because section 56 to 10 get triggered in the hands of recipient, guys. It will be taxable under the head income from other sources. Irrespective of their residential status, it will be taxable in India under the head other sources, guys. Is that clear? Yes, sir. And one clarity I would like to give, guys, here we learned that in section 5, sir, global income would be taxable for ordinary resident. Will it not be a loss for them? Because for this income, especially, they would have paid a tax even in foreign country, no, sir? Yes, no doubt they would have paid it. But while computing the total income of the ordinary resident, we need to consider the global income, guys. But while calculating the tax, we will give the credit for whatever taxes has been paid in the foreign country. Clear. We call it as double taxation relief. So how is it? I will just give an example. This is actually not a part of your intermediate syllabus, but still I will just give an example. Assume I am an individual who is an ordinary resident. I have an Indian income 30 lakh and foreign income 10 lakh. So what would be my total income as per section 5, guys? 40 lakh. 40 lakh, including foreign income. Yes. And on this foreign income, assume I have paid 10% tax in USA, which is 1 lakh. Which is 1 lakh. Now, in India, I need to calculate tax on which figure? 30 lakh or 40 lakh? 40 lakh. As per the rate applicable to me. Yes. Assume the final tax liability. I have just taken a random figure. Okay. We will learn the tax rate calculation, tax liability calculation in the next chapter. Yes. So, I have taken the final tax liability of the total tax liability of an assessee in India is 15 lakh, considering 40 lakh total income. Okay. But should he pay entirely in India? No, guys. And 15 lakh is including surcharges, whatever is applicable. Anyway, in this case, surcharge is not applicable. So assume 15 lakh is including cess. Okay. So now, should an individual pay entire 15 lakh to Indian government? No. As he has already paid 1 lakh in foreign country, we will give a credit of it, which we call it as foreign tax credit or double taxation relief. Okay, 1 lakh we will reduce. Remaining 14 lakh is payable in India. Tax payable in India. Is that clear? And for calculating this, we have different methods and we need to consider exchange rate and all, which will be a part of your final syllabus under international taxation, guys. So whatever I just now explained is only for your knowledge. It is not a part of your syllabus, guys. Is that clear? Sir, why are they doing this? Is, guys, see, in foreign country, you might be paying less tax. By including this income in the total income calculation, in India, they may tax it at higher rate. So while calculating 15 lakh, you would have calculated tax on 10 lakh at what rate? Highest rate. Why, sir? Because the Indian income of a person is already more than 24 lakh or already is getting taxed at 30%. Yes, sir. So what Indian government did indirectly is they made you to pay tax at 20% in India on this 10 lakh. Why so? Because while calculating this 15 lakh, I would have calculated 30% on 10 lakh. Yes, they are giving credit at how much? 10%. So, an individual ended up paying remaining balance 20% in India, guys. Is that clear? Yes, this is what the Indian government is doing. Yes, guys. So this is all about the scope of total income. We have one question. I will just discuss one question on scope of total income, which is also connected to residential status, guys. So under additional question, I have one Sarika question. Sarika, where are you, madam? Yes. Question number 7. Question number 7. Really interesting question, guys. Here, the question is actually connected for both. Clear. So in my question bank, there are two set of questions. The first set of question is called as questions, and second set of questions is called as additional questions. Clear. So under additional questions, it is there. Clear. If at all, if you are referring, please come to question number 7 under additional questions. Okay. Let me read it. Sarika is an Indian citizen, is in employment with an overseas company located in UAE, that is outside India. She is not liable to tax in UAE. During the previous year 25-26, she comes to India for 121 days. First condition already ruled out. She was in India for 50 days, 100 days, 176 days, and 145 days in the financial year. That is last 4 years, guys. Okay. Our annual income for the previous year 25-26 is as follows. Okay, let us mark there only. What all should we take it? Salary accrued or arisen in UAE, it is foreign source. Then income accrued and arised in India, Indian source. Okay. Yes. Next, income deemed to be accrued or arise in India, Indian source. Next, income arising and received in UAE from a business set up in India. Control is in India. Okay, sir. Should I count it? Yes. Okay. For residential status purpose, I need to count it. Yes. Life insurance premium paid by check in India, so for which deduction is available under section 80C, guys. Oh. Sarika has opted out of the default tax regime under section 115 BAC. That means she is eligible to claim deduction under section 80C. Okay. From the information given above, you are required to determine the residential status and total income of Sarika. Okay. First, to determine the residential status, we need to compute what is the total income of Sarika other than the income from foreign source. How much is that, guys? So we need to count it. 2 plus 7 plus 5 minus 1 lakh. Minus 1 lakh. We will get 13 lakh. So it is up to 15 lakh. It is up to 15 lakh. Okay, not more than 15, I can tell. Sarika is an Indian citizen and in employment in UAE. She comes on a visit to India during the previous year 25-26 for 121 days. Our stay in the last 4 years comes to how much? 371. Our total income other than the income from foreign sources 13 lakh. So where she will fit in this chart, we will see. Yes. Sarika, an Indian citizen having a total income other than income from foreign sources not exceeding 15 lakh and visiting India during the previous year would be a resident in India for a assessment year 26-27 if she has stayed in India for 182 days or more during previous year 25-26 as per section 6.1. Why, sir? Because she would be covered in this point, guys. She is settled outside India and during the previous year she is coming to India for a visit and our Indian income is up to 15 lakh. That is total income other than the income from foreign source. So she will fall under this provision, in which case second condition is not at all applicable. She has to satisfy first condition in order to be resident in India and she didn't satisfy. Why is it, sir? She was in India during the previous year only for 121 days. So she is a non-resident. She is a non-resident. And when she is a non-resident, what is her total income? We need to refer to this table now. We need to consider only the income received in India and earned in India. Whereas this will not come. Please be careful. This will not come. Correct? Yes, guys. So please be careful. Now the figure will change. As she is a non-resident, should we consider this figure? No, guys. We should not consider. So what will be our total income? 2 plus 7 minus 1. Correct? Yes. So please be careful. Our total income during the previous year 25-26 would be 8 lakhs. Hope you understood. Please don't get confused. Don't take the same figure. This figure, whatever we derived, is to decide the residential status. To decide the residential status. And before calculating this, we didn't even know what is our residential status. So please don't get confused with this figure, guys. Clear? Because for deciding the residential status, there is one explanation. I will just read that. Okay, there is one explanation. Listen here, which is given here. Income from foreign sources means income which accrues or arises outside India, except income derived from a business controlled in India or profession set up in India. So that means, is this income outside in from a foreign source or Indian source? They are considering it as from Indian source. Is that clear? Yes, sir. So to decide residential status, should we count even this? Yes. Hope you understood. But once she become non-resident, if I have to determine the total income of Sarika when she is a non-resident, I need to consider only this two. Whereas this will not. Hope you are getting it. Yes, sir. Very interesting question. Next, we have one more subpart here. Two more. What would be your answer if income arising and received in UAE from a business setup in India is 10 lakh instead of 5 lakh? Okay. So instead of 5, what if it is 10? So in that case, total income other than the income from foreign sources will increase, guys. How much it would be? 18 lakh. Total income other than the income from foreign sources would be 18 lakh. Okay. In that case, she will fall under this provision, guys. Total income other than the income from foreign source would be more than 15 lakh. In that case, second condition is alive. Second condition is applicable. But instead of 60, it would be 120. Yes, sir. So you can see. So the total income other than the income from foreign source in such case would be 18 lakh. In such a case, Sarika is an Indian citizen having a total income other than the income from foreign sources exceeding 15 lakh and visiting India during the previous year. Can be a resident in India if she has been in India for 120 days or more, but less than 182 days in the previous year, and during the 4 years immediately preceding the previous year for 365 days or more. Oh. So during the previous year, she is in India for 121 days. So part of the condition is satisfied. During the last 4 years, she is in India for 371 days. So both the parts are satisfied under section 6 subsection 1. Second condition is satisfied. Both the parts are satisfied. In such a case, income arising and received in UAE from a business set up in India would also form part of her total income. Okay, first of all, what is the residential status? Resident but not ordinary resident. In that case, she will fall under this category, guys. So she is always not ordinary resident. Yes, sir. Next. In that case, if she is a not ordinary resident, then, sir, will the income from a business set up in India will also be taxable for her? Yes, guys, it will be taxable for her. Okay, sir, you can look here. So in such a case, income arising and received in UAE from a business set up in India would also form part of her total income. And our total income during the previous year 25-26 would be 18 lakh. Sir, how did we get it? Whatever we have calculated here plus 10 lakh. We didn't consider it in the previous case because she was a non-resident, but now she is a not ordinary resident. This figure would be taxable. So 8 plus 10 will become 18 lakhs. Got it? Yes. Then the last point. In continuation to point 2, what would be your answer if Sarika comes to India in previous year 24-25 for only 45 days instead of 145 days? Okay, she is coming to India only for, okay, that is in which year? 24-25. She's coming to India only for 45 days instead of 145 days. So in such case, the second condition given under section 6.1 is not satisfied, people. So we can check whether she is deemed resident or not. Yeah, sure. Sarika comes to India during the previous year 24-25. That is last year, not the present previous year, last year. For 45 days instead of 145 days. She would not be a resident in India for previous year 25-26 as per section 6 subsection 1. Since her stay in India for the last 4 years is less than 365. Is less than 365. During the previous year, she is in India for more than 120. But when it comes to last 4 years, our stay in India is less than 365. So second condition under section 6.1 is not satisfied. So can we go ahead and knock the door of section 6.1a? Yes. However, since she is an Indian citizen having total income excluding the income from foreign sources of rupees 18 lakh, which exceeds the threshold limit of 15 lakh during the previous year and not liable to tax in UAE, she would be resident or deemed resident in India for the previous year 25-26 by virtue of section 6 subsection 1A. A deemed resident is always resident but not ordinary resident in India. And what would be her total income if she is a not ordinary resident? It will be same 18 lakh, including the 10 lakhs. Is that clear? Yes, guys. So this is all about chapter 2 revision, guys.